Welcome to The Explainer. Today, we're diving into a cornerstone of Pakistan's economy, the cement sector. A really detailed new report from Foundation Securities is asking a critical question.
For years, the industry has really been grappling with high costs and pretty weak demand, but this report suggests a major turnaround could be just around the corner. So, what's about to change? Let's break it all down.
Okay, first things first. To really appreciate the potential comeback, we have to look at the incredibly tough period the sector has just weathered. So, the big picture was a general economic slowdown, and that, of course, put the brakes on major construction projects all across the country, affecting both the public and private sectors.
On top of that, you had soaring inflation that drove up the cost of, pretty much everything. It hit construction materials especially hard, which squeezed budgets and just cooled off demand.
And, to top it all off, we saw record high interest rates. This made getting the financing needed for new projects incredibly expensive. It was really a perfect storm of challenges.
And the results of all those pressures? You can see it right here. A consistent decline in local cement demand for 3 straight fiscal years. A 16% drop in FY23 alone, that is a major slump by any measure.
But here's where the story really starts to get interesting. According to the Foundation Securities report, this very slump is what's setting the stage for what could be a powerful cyclical recovery.
The core argument from the analysts is that the fundamental economic picture is finally changing for the better. All those headwinds we just talked about are actually starting to turn into tailwinds.
This optimism is built on these 5 key factors. We're talking about everything from demand bouncing back to costs coming down. So let's break down exactly what's fueling this forecast.
So why is this rebound more than just, wishful thinking? Well, it seems to be backed by some really solid market dynamics.
A really key reason for all this optimism is a concept called pricing discipline. See, usually in tough times, companies just start slashing prices to win whatever business they can get. It ends up hurting everyone's profits. But this time, something different happened.
Despite conditions that would normally trigger a race to the bottom on prices, the sector showed remarkable resilience. The companies held the line, and that single decision protected their profitability in a huge way. It turned out to be an absolutely crucial move.
Now, on the cost side of the equation, a major headwind has totally turned into a tailwind. Energy is a huge expense in cement production, but falling international coal prices, plus getting access to cheaper local sources, has significantly eased that pressure.
And hey, remember those record interest rates? A significant cut of 9.5% is set to lower financing costs for both the cement companies and, just as importantly, their customers. The full benefits of this are expected to really kick in during fiscal year 2026.
So, the crucial point is this. You take easing costs, lower interest rates, and all this pent-up need for construction, and you get this projection. A strong, double-digit recovery in local demand starting in FY26. That is a real game changer.
Now, to really understand why analysts are so confident this time, it's really helpful to look at the industry's history. The cement sector moves in cycles, and the past holds some really important lessons for us.
This timeline really shows the industry's roller coaster ride. In the past, like in the first and third cycles, adding new factories often led to price wars and just shrinking profits. Exports were the saving grace during that second cycle. But look at the current cycle, EC4. This is the key difference. Instead of cutting prices, the industry showed this unique resilience, maintaining that crucial pricing discipline even with low demand. It really seems like the lessons of the past have finally been learned.
So, given this positive outlook, what does it all mean for investors? Let's take a look at the specific companies that are highlighted in the report.
Based on their analysis, the report identifies several key companies with an outperform stance. That just means analysts expect them to perform better than the overall market. And these are their top picks, with some pretty significant potential upside based on the sector's expected recovery. Of course, no forecast is ever without its risks, and for a balanced view, it's really important to consider what could derail this positive outlook. A global slowdown, more supply chain issues, or sudden spikes in commodity prices, these are all external factors that could definitely impact the recovery.
Which leaves us with a final thought. The detailed analysis from Foundation Securities suggests the building blocks are firmly in place. The question now is whether this revitalized cement sector will indeed become a key foundation for Pakistan's next chapter of economic growth.